Good afternoon. My name's Campbell McCrary, and I'm Vice President Capital Markets at Amvest Capital in New York. Welcome to the Amvest Capital Inc. live webinar with Western Copper and Gold. Western trades on the TSX and the NYSE American as WRN. We hope you'll enjoy today's program. It will also be available in replay mode. Feel free to chat in your questions in the question pane. Go to Webinar Control Panel or simply email them in. I'll ask the questions in real time. Amvest Capital is a New York-based specialist investment management and corporate finance firm focused solely on the natural resource sector. This call is important for informational purposes only. Please read this disclaimer. We have with us today presenting Dr. Paul West-Sells. Paul has over 25 years experience in the mining industry, has worked with BHP, Placer Dome, and Barrick, and increasingly senior roles in research and development and project development. He joined Western Copper and Gold in 2006, where he's held a number of executive positions and is now the president and CEO, overseeing the day-to-day operations of the company. And Paul, if you want to share your screen. Following the formal presentation, members of Amvest Capital will ask questions of management. We also look forward to any questions that you would have sent in. So full screen mode, Paul, and I think we're ready to go.
All right, well, thank you very much for that introduction, and thank you all for coming to listen to me talk to you about Western Copper and Gold. I will be making forward-looking statements, so please review these disclaimers before making any investment decision. Just to sort of get everybody into the right space and talk about the company. So Western Copper and Gold is a single asset company which has the Casino Copper Gold project that we've been developing for about a dozen years at this point in time. As Campbell pointed out, we're trade both on the TSX and the NYSE under the ticker WRN. Cash position, we ended Q2 with around $6 million in the bank. What does that mean for a company like us? Well, we're doing drilling right now, which I'm going to talk to you a bit about, so that's going to burn through a bit of that. But you know, our G&A runs around $2 million a year, so there's certainly enough money in the bank to sort of keep us going here for the next sort of year or so. Share structure, share price sitting around $1.65 Canadian. This is so on the TSX, gives us a market cap of around $190 million. Where are the shares? Management and board holds 12%. That 12%, 6 of that 12% is with our executive chairman, Dale Corman. 5 of that 12% is with a new investor, a new board member by the name of Michael Vitton. You guys, New York-based people might know him. And then the remaining 1% is with the rest of management. There's also a group of high net worth investors which represent about half of the outstanding shares. I'm showing here at 48. And really there's a half dozen key names in there. They've been big supporters of the company. They've invested in, you know, all of our private placements and really been good supporters of the company over the past few years. So let's give you a bit of a snapshot and then talk a bit about the copper and gold markets. And for those of you who haven't been up to site, and I'm assuming that's many of you, this is a view actually sort of looking west from the top of the deposit. And I always like to sort of pause here and sort of point out, you know, this is gentle rolling hills. It's not all that mountainous. As you can see, there's very few trees. It's actually semi-arid. The key takeaway here, it's a great place to build a mine. So sort of hitting some of the highlights, you know, Casino it's a significant copper and gold deposit. We finished a feasibility study on it in 2013. Indicates that it's a very robust project. We just announced a new resource, so the resource has been updated. That came out in June, and have drilling in progress, and I'll get into that in a bit more detail. And really, this is a project that's been waiting for the right time, and the right time is now. I mean, we're in a interesting copper market, and I'm going to talk a bit about that. And also, of course, as everybody knows, I mean, gold is really the flavor of the month. Gold obviously went over $2,000, pulled back a bit from that, but I mean, the future of gold is very, very good. And as a company, we've got a really clear path forward at this point in time. You know, this year is exploration, but that's going to get finished up here in a couple weeks. And then it's update the feasibility study and get the project into permitting. So talk a little bit about copper. And for those of you who follow the copper market, the graph should be fairly familiar. And really the key thing here is that, you know, when we look to the future, we're looking at, you know, a deficit of 5 million tons when we look towards the future. That's 65 mines the size of Casino. And as we'll see, Casino is a pretty large project. And that's just based upon a very, very simple 1.8% copper growth. If you start to look at, you know, post-COVID, the amount of stimulus that's coming out of the global governments, you look at electrification. Just electrification is predicted to add 6 to 9 million tons by 2040. That's not, you know, incorporated in that graph. And also the decreasing production. And there's been a lot of this in the news. You know, it's really impacted, you know, Chile and Peruvian mines. They've had a lot of shutdowns because of COVID, and, you know, and you're seeing that in two things right now. One, copper price, which has popped up over $3 and sort of has been bouncing around that. And secondly is actually in the stocks, and you know, the LME stocks are the lowest they've been in 13 or 14 years now. They're below 100,000 tons, which, you know, it's been, you know, over a decade since we've seen that. So very, very good copper market. And then in the gold market, what's interesting in the gold market for me is really what you look at when you see the majors. And, you know, majors here, and you can see at the beginning there, we've got Newmont, Barrick, Anglo Gold. All of these companies have very, you know, we're showing here 12 to 15 years of remaining reserves. So, and these are large companies. And so when they look to replace these reserves, they need to look at large reserve packages. They can't look at these little sort of gold mines. They need to look at big projects such as Casino. And, you know, when you look at these big projects, particularly the big copper gold projects, they're very, you know, they represent large deposits of gold. And, you know, this was acknowledged if you go back, and Mark Bristow, and this is sort of, I guess, about a year and a half ago at, in London at the CIM convention. And, you know, he points out and he says, look, you know, we can look at these large lower grade ore bodies. It doesn't need to be high grade as long as it's in a very low strip ratio environment. And this is a theme I'm going to come back to again and again on this presentation, because that is really why Casino works as well as it does, is this very, very low strip ratio that we have on the project. Okay, well, let's dive in and talk about the project. First of all, you know, sort of headline numbers. The top row is the M&I resource, the bottom row is the inferred. But looking at those together, you're looking at 21 million ounces of gold and 11 billion pounds of copper. So that's a new resource that was updated, as I said, in June of this year. But just, you know, huge numbers there. And interestingly, if you look right now, if you look at the revenue distribution, and this is at 1950 gold and 290 copper, we're actually more of a gold company than a copper company. So we should actually be changing our name to Western Gold and Copper, which has been, believe you me, has come up at a couple of board meetings. But yeah, in this environment, we actually produce more and more gold than copper. And you know, how does this project stack up compared to some of the other projects that's out there that are out there in the news? And if you look at Casino and you look at it as a copper project and you just compare it to other copper projects, you can see, you know, with just the copper, we're a little bit bigger than Rosemont. We're, you know, maybe half the size of Cascabel. But when you look at it in terms of copper equivalent, you can see that those gaps get a lot sort of smaller. And we're not as big as SolGold's Cascabel, but we're sort of in the same ballpark. And compared to a Rosemont or Northmont, we're double the size of those projects. Looking at it from a gold perspective, because as I said, right now, actually, this is primarily a gold project, and that's where our revenue would come from. You can see with just the gold, we sit fairly similar again to Cascabel, a bit bigger than Metates, about half the size of Donlin Gold. In terms of gold equivalent, we actually are bigger than Donlin. So keep that in mind, when you're thinking about the size of this project. I mean, this is a true global, important global deposit here with Casino. And sort of showing a bit of comparison of a bunch of projects here. This is a busy slide. I'm not going to go through every line item here, but really what I'm trying to show here is comparing a bunch of sort of projects and showing a few key things here. So first of all is the waste to ore ratio, or the strip ratio. Again, I said I'd come back to this a number of times, 0.59 to 1. You can see compared to those other projects, this is significantly lower. This is our ace up our sleeve. This is why our costs are so good. This is why the economics on the project add up as well as they do. The other thing to point out is the capital cost. I mean, life of mine capital costs of a little under 3 billion. That sounds like a lot, but again, these large projects, you can see that with the exception of Trilogy, which is a small high-grade mine, that's the lowest capital cost on that page. So, our capital cost it's a right-sized capital cost for this project. And last, and this is really, for me, the real investment thesis here is that you look at the IRR, the payback, net present value, and we sit very, very nicely, particularly from an IRR, but then you look at our market cap at under 200 million Canadian, and that represents a real value for investing. And I'd argue that we have a lot of room to grow in terms of that market cap and our share price, and whereas a number of these other projects really are already getting fair value in the market. So digging a bit more into the project, this shows a cross section. So there's two parts to the project, the surface, and when I say the surface, I mean the absolute top of the deposit gets mined off first and goes onto a heap leach. That's 157 million tons at 0.3 gram per ton gold. Then beneath that is the sulfide resource, and that goes through a typical flotation mill. And there's two components to that. Looking at the first 4 years, which is shown in light orange there, that represents 172 million tons at 0.7, so quite a bit higher grade over the first 4 years. And then life of mine, all that combined, is our reserve at 965 million tons at 0.5 copper equivalent. Now, one of the knocks on this project is the grade. Oh, well, the grade isn't all that great. But really, if you compare the grade of Casino and to peers that are operating, particularly in our neck of the woods here, I mean, Western Canada, I've picked a bunch of Western Canada mines here. You can see we're actually quite a bit higher grade. 0.5% copper equivalent, and then more importantly, that 0.7 over the first 4 years are not bad grades. You can see, Highland Valley Tech has been operating that for, over 50 years. Mount Milligan started up a few years ago. Red Chris, a little bit higher grade life of mine, but not compared to our first 4 years. I've thrown in Cobre Panama. That's one of the big mines that just opened up. As you can see, it's actually lower grade than what we're looking at Casino. And of interest to me was if you look at the average of the operating mines, it actually sits right around that sort of a little over 0.5, but actually the average of the developing mines is quite a bit lower. So, this is we're right in that sort of sweet spot with where you're starting to see, new projects come forward. And look a bit about cash costs, and this is from the feasibility study. Because of the polymetallic nature of this deposit, the net of byproduct cash costs are actually negative. So as a copper mine, it's negative $2.70 per pound of copper to produce the copper. Or if you look at it as a gold mine, it's negative essentially $1,500 an ounce. For a project like ours, it's almost better to look at the cash cost on a co-product basis, which is $1.20 per pound of copper and $800 per ounce of gold. So, very, very low cash costs. I showed you the economics from the feasibility study at the base case from the feasibility study in the previous table, but when we actually sort of look at the economics of this project at spot, so $2.90 copper and $19.50 gold, I mean, absolutely tremendous. I mean, over 30% IRR, net present value of over $4 billion, a payback under 2 years. I mean, it's unparalleled IRR and payback for a project of this size. And, if you want to look at more conservative prices, that's fine as well. I mean, you're looking at $2 copper and $1,000 gold, you still hit that sort of magical 15% hurdle. And then, of course, you go the other side and you sort of say, well, what if copper goes up to 450, which I certainly think it could. Gold stays at 2,000. I mean, you're looking at, $5 to $5.5 billion net present value on this project. So talk a little bit about what's going on up in the Yukon, what we've been doing. I won't mention any names, but for these large projects to go forward, you need to really work very, very closely with the community. Make sure you have that community support. Make sure you have the local Indigenous community support. It's a lot of work. I spend, more time up in the Yukon than anywhere else. And it pays off. We've been up there for 14 plus years now. We've got agreements with all the key First Nations. We've won actually some environmental awards. We support a wide range of programs up there. And all of that, it's a lot of work. It's a lot of sort of difficult questions and conversations, but it pays off. And this is a good example of that payoff. This was a couple of years ago. That's the Prime Minister of Canada. The other guy is the Premier of the Yukon. And they announced a $130 million funding package for the Casino Road. And how that works is they're actually going to build or fund 100% of the first half of the road and 30% of the second half of the road. And again, you don't get the Prime Minister of the country coming up and announcing a road to your mine without making sure you have that community support. And we've worked very, very hard on that. And, the Yukon, I can't emphasize this enough. I mean, if you look at the Yukon and the economy of the Yukon, mining is the largest private sector contributor to the Yukon economy, and that's key. Tier 1 jurisdiction, great government support, permitting. We all think it takes too long, but it is a one window environmental assessment, which is unique in Canada. There's a number of initiatives underway to make the permitting more streamlined. And this is being shown here with the number of mines that are opening. The Eagle mine opened up last year, the Minto mine, which has been open for about a decade now, and now you have Keno Hill looking like they'll be open up by the end of the year. So you've gone in a couple years from one mine to 3 mines opening, and that just sort of shows the positive developments in the territory. And drilling down a little bit more about the exact area where we are, this is now a mining district. We're here at Casino in the orange, but next to us in the green here is Newmont. We've got Agnico Eagle and Kinross, which are big investors in the White Gold project, which is everything here in pink. On that map, and that's this at the bottom here, that scale bar is 50 kilometers. So you're looking at maybe a 100 kilometer diameter area here. You've got 30 million ounces of gold. Tier 1 jurisdiction, Canada, a local government that supports this. So it's a pretty exciting area. Everybody's been doing a lot of work up there. White Gold's been drilling. Last year, Newmont did quite a bit of drilling up there. So it's lots of activity in the area. So speaking of drilling, let's get on to and talk a little bit about what we've been doing this year and last year. And so last year we did a bit of drilling, and we also acquired all of these properties directly to the west of us. And so when we look at the project now, there's a couple of new targets that have come out. So first of all, everything in red here, this is the Casino Pit from the feasibility study. The drilling last year, we identified in the south of this pit a high-grade gold zone. That's one of our targets for this year. At the north, we identified this new northern porphyry. That's a second target. And then in the land that we acquired here to the west, there's the Anna target and the Casino B target. And I'm going to sort of drill into those in a bit more detail. So first of all, the high-grade gold. You know, obviously everyone is very excited by this. You know, what we saw here, what we drilled last year was this top intercept, 55.1 gram per ton over 3 meters. This was the third time that we'd hit this very, very high grade gold. We'd hit, you know, 54 gram per ton previously, and then historically there was actually 74 gram per ton gold. You know, when you hit this really high grade gold 3 times, you really need to sort of pull up your sleeves and dig in and say, is there something going on here more than just the copper porphyry that we need to understand better? So we went in, we identified, and what's shown here in pink is all of the intercepts greater than 2 gram per ton. And what we're seeing here is it's all associated with bismuth. There's this higher grade gold zone. It's a post mineralization event. So this isn't the porphyry. This is another event that laid down this higher grade gold in the south of the deposit. We're back in this year doing a bunch of drilling specifically on this, you know, different angles to really help delineate that. And, you know, we hope to see the results from that fairly soon. The other is the northern porphyry. Again, what we saw here, we were at the edge of the deposit. We thought we were going to basically be sealing off the northern part of the Casino porphyry. What we hit was actually a new porphyry. It's younger, it's higher up in the system. And you can see the grades at a little bit lower grades than what we're seeing in the main part of Casino, but certainly ore grade. This year, the goal is to delineate, you know, how far does this extend to the north, to the west, to the east, really try to set some boundaries on this to understand, you know, what exactly that we have here. And then last is these, you know, new exploration targets to the west of us. And so this, we acquired Canadian Creek last year, a whole bunch of targets on there. This year, we're focusing on 2. One is Casino B, and what you're seeing here with Casino B is an extension of this higher grade gold. So you can see a couple of intercepts, 40, 50 meters of 0.7. So again, we're trying to sort of see if we can help or further delineate this higher grade gold zone in the south of the Casino deposit. And then there's Anna, and Anna is another porphyry target. It's another, you know, looks very similar from a, you know, geochemistry point of view as Casino. We've got 3 holes planned there, just to sort of say, you know, what exactly do we have there. The other thing that's been new, we've got a new, pretty much a new board. You know, Dale at the top and Klaus at the bottom are the 2 board members that were here 2 years ago, and everyone in the middle there is new. And you know, Tara brings some very significant Yukon experience. She was involved with regulatory setting up the YESUB, which is the key regulatory agency up there. You know, Michael Vitton has been a great asset. He's the former executive managing director of U.S. equity sales for Bank of Montreal. You know, $200 billion worth of deals under his belt. So, you know, tremendous contacts with him. And then Ken Williamson, who was on Tahoe's board and Gold Corp's board, and again, you know, brings you know, some really good experience onto the board. And so that sort of, you know, just to sort of summarize, I mean, this is a project that, you know, ticks the boxes. You know, this is a significant copper and significant gold, but actually primarily gold at this point in time. We've got a feasibility study indicating a very robust project with absolutely stellar economics. And, you know, we've got this great exploration plan that we're executing this year. And so if you look at over the past few years, I mean, we've been slowly de-risking this thing and moving it forward. I mean, 2018, we cleared a big hurdle on permitting with our tailings alternative study. Last year, we did the infill drilling, which resulted in the updated resource that came out this year. This year, we're sort of finishing off looking at those additional new zones that we found last year. Expect the new drill results to come out at the end of this year, and then we'll look to launch an updated feasibility study. And if you want to listen to somebody else, both Cormark and H.C. Wainwright have got great coverage on us, and Heiko and Stefan know the project well. Roth has coverage on us. The analyst there just left, so I have to wait for him to Roth to get somebody else set up there. And that, I think, covers it. So I will turn it, I guess, back to you, Campbell, for questions.
Excellent. Thank you, everyone who so far sent in some questions. We look forward to some more. And Amvest, of course, has a treasure trove of questions as well. Starting with, do you feel that short sellers are having a negative impact on the share price, Paul?
I mean, I think, I think that there's been a couple of instances where there's been some negative impact, but there's also been some instances where they've been caught short. And if you look at the way that our share price has moved, it's been, I mean, the amount of trading that we have now is significantly higher than what we had 6 months ago. There's really good volume. And there's some days where you can tell that the short sellers are getting caught because there's 1 million shares traded over the two exchanges and the share price goes up by 5 or 6 cents. So I think that there's as many positives from that as negatives, at least for us. And in a rising copper environment and a strong gold environment, you got to be pretty ballsy to short our stock.
Excellent. Kind of summarizing, how large is the land package that Western has?
Yeah, let me go up and
let's revisit that. Yeah,
revisit that. So this gives you a bit of an idea. So this is 50 kilometers. So I mean, I think from this side to this side, that represents about 10 kilometers and or 10 or 15 kilometers, and then it's sort of an odd shape here, about the same there. If you see in this, and I can't actually read that scale bar, but I mean the casino pit is 2 kilometers across, so it gives you an idea of that's probably, and we're not seeing the whole property there, but where all the stuff is happening is probably 8 kilometers by 4 or 5 kilometer sort of zone. And then we've got other areas that are claimed just because that's where we're going to put tailings and build plants and things like that as well.
All right. Someone commented of the relatively low warrant overhang compared to your peers. How did you successfully manage that?
Well, we didn't just go and raise money for the sake of raising money. And if any investment bankers in the audience will know, these investment bankers come up and say, if someone offers you money, you should take money. Well, that's not our philosophy with Western. We're very, very prudent when we raise money. We only raise money when we need to. We only raise the amount that makes sense. And so that's why we have such a low warrant overhang. Those warrants, by the way, that 1,500, that was a raise that was actually, which brought in Michael Vuitton. So actually all of those are owned by him. So that's, not only are there not a lot of warrants, but we know exactly where those warrants are. And he's one of the board members.
Just one more question. You gave precise shareholding percentages. Are you looking to increase institutional and shrink high net worth and or other by means of today's outreach? Yeah,
I mean, I think that, the market, we have why do we have such a low institutional investment is sort of an interesting question. And the main reason that we have a low institutional is that we haven't done any large raises. And when we look, we're going to have to take a look at the drill results and sort of compile those. But the next two steps, which is an update of the feasibility study and then re-engaging in permitting, are going to take a bit of a bigger investment. So certainly we're going to look to raise money to that and look to build that institutional investor base, because we think that that's important. But we just really haven't had a need to sort of do these larger raises in the past sort of 5 or 6 years where institutional players would come in.
Great, thank you.
Thanks for that, your presentation, Paul. So just on the strip ratio, obviously you mentioned that at the start is one of the key attributes of the project that is quite appealing to a lot of people. Yep. So if you just go to that slide, it starts with the heap leach, the gold cap. Just wanted to talk about how the strip ratio changes over time as you're moving through the mine plan.
Yeah, so I mean, the gold cap almost has no strip ratio on it at all. And I mean, the other thing is and it's worth looking at some of these other projects. The pre-strip can be a very expensive, it can be hundreds of millions of dollars just to remove, any material that isn't ore on the top of the deposit. We don't have any pre-strip at all. I mean, I'm actually running a big heap leach test program here shortly, and they just went in with an excavator and took all of this heap leach material off the top of the deposit. So very low there. The first 4 years from the feasibility study is actually 0.49 to 1. So it's quite a bit lower, but that is actually before we did this infill drilling last year. And, we haven't done, this is why we wanted to update the feasibility study. Why we did the infill drilling is that we expect that to drop down significantly from that 0.49 to, we'll see, but I won't be surprised if it's half of that. And that just goes directly, I mean, these large projects, they're just big earth moving exercises. It just goes directly to how many trucks are moving around, and it goes directly to those operating costs and makes them look a lot better.
Got it. And then on that comp slide against some other projects, given the kind of contained tons of copper and lines more up with SolGold's Cascabel project, if they did PEA, how did they not release their strip ratio? Is that something they're still working on?
Well, so they're using block caving. So it's a bit of a different animal than an open pit, and so you don't usually have a strip ratio with it. Yeah.
Yeah, fair enough. And when you go back to comparing the strip ratio over time, how does that compare to some of the other peer deposits?
Yeah, I mean, again, with the infill drilling, this is going to go down, and we're already, the closest one here is Pebble at 1.5, but Seabridge and Hud Bay, are 2 to 1 and 1.6. So, it's a significant advantage, and I can't emphasize enough that is absolutely key to what makes this project works.
Yeah. And then what's the average depth of the leach cap inside the ore body? And are there any expansion opportunities of that?
Yeah, so the average depth of the leach is about, it runs about sort of 70 meters in average depth. We've got it pretty much defined, but as I said, what is interesting is, with a porphyry, you can do fairly wide space drilling because you think you know everything in between. What we've done with this new higher grade gold zone is we've run quite a bit tighter drilling and sort of chased this post mineralization event, which is laid down higher grade gold. So what we're going to find is a lot of stuff that was probably considered to be waste in the south of the deposit is going to be higher grade gold and will go on to that heap leach.
Yeah, got it. And then kind of you could delve in a bit more detail in the areas of focus and where the drilling was and the work done between the old resource and the more recent resource upgrade, and what work went into that in terms of like drilling, you know.
Yeah. So this is a good example. So, you know, here's the pit, is everything in red. All of these blue dots are the drilling from 2019. So that's all the infill drilling. So all of this material that sort of is surrounded by that, and down in the sort of in the northern section and in the southern section, that was all considered to be waste because it was an inferred resource, and that's now all gone into ore.
Got it. Thank you, Campbell.
Sure. Who owns the NSR and when was it agreed? Does it cover all the metals in the deposit and sub-deposits?
Yeah, I'm just gonna go back to that slide that talks about that. Yeah, so the NSR is held by Cisco. And so the story of that NSR is that we actually granted, well, there was about half of that NSR was purchased, was owned by, you know, a long time holder, that an old explorer company that did exploration and casino in sort of the 1980s. But the second half we actually sold to Orion for $32 million. So that's another reason why our institutional shareholding is low. I mean, we got a pretty big influx of cash with that $32 million by selling that royalty. And then Orion sold that to Cisco, I guess 3 years ago now. And we've got a great relationship with Cisco, and Cisco they participated in, you know, a few of our smaller financings, and you know, they're a partner in this project now, and have been a good partner.
Have you done a technical pre-feasibility on your ore? Have all the reagent consumptions been considered?
Yeah. So I mean, we did a full. I mean, not only you know, we did a pre-feasibility study. We did a full feasibility study in 2013, and so there is, you know, significant metallurgical work that's been done. There's, you know, significant geotechnical and mine planning and you know, full layouts, and all of that is available on our website. If anybody wants to do a really deep dive, they can do a really deep dive on the project.
2 questions regarding timeline and time frame. So earlier part, usual question, develop the mine, partner up, or free carry. I get a free carry. So I guess some of the time frames for some of those strategic potential ideas, and then can you, while we're getting there, kind of talk about or summarize timelines of road design, permitting, and building? So I guess what does the next 18 months look like?
Yeah.
Summary.
So, I mean, just go back here to a little bit of our talking a bit about that. So the next step for us, of course, is to finish this drilling program and release those drill results. And that'll be done this year. You know, and unfortunately, the labs have been very, very slow. There's, I guess, social distancing within the labs. And so they're running almost a 2-month turnaround on these labs. So it's going to take until likely the end of the year to get those results out. After that, the goal is to update the feasibility study, and right now we're digging into that and putting some time around that. I'll be honest, because our deposit now is so big, you know, we're up to 2 billion tons. You know, we're really sort of taking a look at what is the best way to progress the project forward. So you know, the engineering is not it's not just a simple sort of run some new numbers in the feasibility study. It's a bigger engineering activity. So we're putting some timelines around that, but I expect that to take about a year. Then we get back into permitting. We can run a lot of that in parallel, but it probably lags issuing a updated feasibility study by 6 months to a year. 18 months to get through the environmental assessment, and then you can begin construction. So that sort of talks about the project timeline. There was also a question about partners and bringing somebody in. We have conversations. We're having conversations now. We've had conversations in the past. There's lots of opportunities. There's opportunity to bring somebody in as a small partner now, work with them to update the feasibility study and take some things off. That's one of the options that we're considering. And then the other option is we just put our head down and move this thing forward, and we then deliver to the market a fully permitted feasibility study backed mine. And either look to build that on our own or bring somebody in.
And then, of course, tied to that is the infamous highway there getting built. What's the timeline of that construction?
Well, I've been promised.
And would that improve anything in all your assumptions?
Yeah, I mean, I've been promised by the minister responsible for it, and he did it in a very public space, and I had lots of witnesses to it, that they were going to be breaking ground on this first section this year. So they've got an agreement with the First Nation on that first section. They've got the permits, I believe, in hand. Well, not in hand, but they've been submitted. But they said that they're going to start to break ground on that this year. I think it might just be some clearing this year, but next year. I mean, this is federal government money that could go to work, and so there's a real push for them to make sure that that money gets spent, particularly in this environment where they're looking for good projects to put people to work, just in this depressed economy that we have right now.
Sure, thanks.
And then on the infrastructure in the area, obviously the road and the agreement with the government is a great coup. How about on power? What will be the power source?
Yeah.
For the project.
So power. I mean, power is another sort of key component to this project, and really once we sort of figured out what made sense for power, it really unlocked the value here. And so what we're doing for power is we're going to truck in liquefied natural gas and then burn that liquefied natural gas to generate electricity. And that might sound a little, well, can you actually do that? Well, 10 years ago that was maybe not that feasible, but now the city of Whitehorse, so I mean, this is the city there. How do they generate electricity? One of the ways that they generate electricity is they truck in LNG and they burn it in a power plant that they built 3 years ago. So, I mean, this is such a good idea for powering the northern Canada that it's popping up all over the place. And so that's exactly what we're doing. We're not doing anything new. It's already been proven out by the community of Whitehorse. We're just sort of piggybacking on that idea.
Yeah. And then what about the source of the water required for that?
Water, yeah. I mean, this is the nice thing about being in the Yukon, and I'm not sure if you can see on this map here, but just north of the little star that's Casino, you'll see that there's a river. That's the Yukon River. We calculated how much of the water of the Yukon we would use, and I think it was 0.01%. So yeah, the Yukon's pretty big, but we have no issues with water, and it's, I think, about 15 kilometers from the site.
Nice, that's very handy.
Mm-hmm.
And then any other recent infrastructural developments in the area that help improve economics and or getting the project off the ground?
I mean, the other infrastructure improvement that I guess is on the books is where the port that we would go through, and it's not shown here, but if you go sort of south of Whitehorse to Skagway, the port of Skagway is where we're looking to ship our concentrate. Right now, the Minto mine uses that, so you know, exactly the same product. I mean, it's a smaller mine, but the same idea. And you know, we've had a number of discussions with the community of Skagway and looking at sort of you know, improving the infrastructure there. I mean, what they have there could work. They actually in the past shipped more concentrate through that facility than what we're contemplating, but they are looking at upgrading it and adding a new ore loader, improving the storage capabilities there. And so that's something that, you know, we're working with them on.
Yeah, gotcha. And if you could just please talk a little bit about the waste and tailing management for the casino project. Yes. And how complex it is.
Yeah, so if you look at, you know, I sort of made a point here, you know, we finished this tailings alternative study in 2018. That was very, very key. That was an 18-month process. It came out of the permitting of the mine in the Yukon. And really came on the back of all the issues we've seen globally with tailings facilities. And so we spent 18 months, we looked at every possibility to deal with tailings and mine waste. We actually started with 495 options, if you can believe it, and that was whittled down to one. And so what we're looking at doing with the tailings, it's sort of a conventional tailings deposition, but with a lot of sort of very, very key modifications. And the key modifications really are around, first of all, making sure that the amount of standing water in the facility is kept at an absolute minimum. Good news, this part of the Yukon is semi-arid. So this isn't like Brazil where there's huge rainfall, very little rainfall up here. So that's very easy to do. And then the second thing to do is it's almost a sort of two-stage tailings facility where you know, the sort of potentially acid generating material is kept behind almost two dams that are to the north. So that was a big study. We finished that in 2018, and that's really sort of what, you know, kicked off. Okay, let's do infill and update the feasibility study. So we're just sort of following up on that, and we'll incorporate that new tailings design in the updated feasibility study.
Gotcha. And just briefly back to the LNG plant and water, does the capex from the last feasibility study include getting water to the site and construction of the LNG plant, or that come out in the updated study?
Yep, it includes, I'm just seeing if we might have this in the appendix. I'm not sure. Yep, there we go. Yep, so you can see, I mean, there's the power plant there. I mean, the power plant is $200 million. So, I mean, it's there. I mean, access road. So that actually drops by $30 million because 30% of that's going to be paid for by the government. The water is wrapped up in I believe the concentrator capital here, but that's part of it as well.
Got it. Thank you. Campbell?
Yeah. Would the project be amenable to phasing the capex requirement or further phasing of the project, or being a classic northern mining situation? There's not really too much you could scale down.
Well, I mean, there's
cost.
Yeah. I mean, as I said, we've gone from a billion-ton reserve to a 2 billion-ton resource, and so this is going to be staged. Even this project that we're describing here, going forward, this would be the first stage, and you need a second stage. So one of the things that we're going to do once we have all the drilling results done is we're going to go back and take a look, and we are going to do a capacity study and say, is there a way to phase this moving forward? One of the options, of course, is to just build the heap leach first. I keep going the wrong way on this. There it is. If we just build the heap leach first, obviously that would be a way to stage it. If we can find enough higher grade gold in the south of the deposit with this drilling campaign, then that would be one of the options we would look at moving forward.
Okay. Is there an option to buy back? Actually, does the capex include getting water to the site and construction of LNG?
Yeah, we covered that, I think.
And then with the, is there an option to buy back all or part of the NSR? How much and at what price?
Yes, and unfortunately, no. We did have that option, but that option is now expired.
Excellent. We've reached the top of our hour almost. I want to thank everyone for tuning in, and please, when we cue you for feedback, please share a few lines either in the feedback box or in follow-up emails, and follow the company in the usual social media places, Western Copper and Gold, and for that matter, Amvest Capital. I'll turn it over to you, Paul, for a closing statement and how we can follow up if we're interested in learning more.
Yes, and yeah, I mean, so Chris Donaldson, who's on the call, you can, if you just actually send emails to info@westerncopperandgold.com, they go directly to him. We answer them, and certainly you can reach out directly to me. I guess, I mean, just as sort of a parting comment, I mean, this is a pretty exciting time in the company. We've got drill results that are going to come out shortly. We've got a new board, and we've got this great copper and gold environment that we've been waiting for finally, and a great project that is sort of moving forward in that environment. So, do your diligence, but I mean, this is a great time to invest.
Absolutely, and certainly a lot of interesting and well-known and important people have been getting in again most recently. So it's a very good timing here. With that, thank you everyone, and thank you Paul and Chris, and till we meet again.
All right, thank you.
Thank you.